BigBear.ai stock has been hot of late, and in just the past 6 months, it has doubled in value. What's behind these gains, and is this a stock you should consider buying? Let's take a closer look at its fundamentals, valuation, and overall performance to see if this is a stock worth investing in today. So what does BigBear do? It helps companies make AI-powered decisions. It's a data analytics company not unlike Palantir. It has won government contracts, it's involved in cybersecurity, can offer digital identity management and facial recognition, which is where it can have big opportunities with working with the government. It also does modeling and simulation, which can help companies forecast their supply chains and do what-if analysis. There's a lot of ways the business can grow, and it all goes back to data analytics and AI. This is why I see it as a similar stock to Palantir, except much, much smaller. Right now, BigBear's market cap is at just over $1 billion. And with Palantir at nearly $300 billion, you can see why some investors are really bullish on BigBear, hoping that it might take off and be the next big AI stock. But while Palantir is profitable, BigBear isn't. And not only that, it isn't generating the type of growth Palantir is either. Looking at its financials, you see a top line that has shown limited movement over the years. And its bottom line isn't looking terribly great either. There's a lot of noise in its earnings, but if you look at its operating loss, it grew from $35 million in 2023 to over $45 million last year. The company reported its latest earnings numbers on May 1st, and these are the key numbers of importance. $385 million. That was its ending backlog as of March 31st. But remember, this includes options, so this isn't all guaranteed to come through as revenue in the future. However, it's a key metric that tells investors the volume of deals it's closing on. $107.6 million. This was its cash balance as of the end of the period. This is important because BigBear isn't profitable, and it's a cash-burning business. How strong this cash balance is can determine how long it may go until it needs to raise capital, likely via a stock offering. Over the past 12 months, it has burned through roughly $30 million in cash from its operating activities, plus another $11 million in investing activities. For now, this cash balance looks good and gives it a lot of runway for a while. It did, however, recently raise $64.7 million from the exercise of warrants. The next number is $58 million. That's how much it reduced its long-term debt by, as a result of voluntary conversions of its 2029 notes. The problem is it's still carrying over $100 million in long-term debt. $21 million. That's the size of its operating loss this past quarter. It looks like a substantial improvement from the $98 million loss it posted in the prior year period, but that included goodwill impairment charges of $85 million. If you take that out, then last year's operating loss in Q1 would have been just $13 million. So technically, its operating loss actually got worse. $5.1 million. That's how much the company spent on interest charges during the quarter. That may seem modest, but consider that it's significant when you look at its gross margin, which totaled $7.4 million. With so much in interest charges and nearly enough on their own to wipe out the company's gross margin, it's going to be difficult for BigBear to become profitable anytime soon, unless it significantly scales its operations. Overall, the recent results didn't look so great for BigBear. This is a high-risk play, and as you can see from the stock chart, there is a lot of movement and volatility. And a big reason for the volatility is that this is a highly shorted stock with many investors betting against it. Short interest is up over 20% of its float, and that's down from more than 30% earlier this year. There's a potential for a short squeeze if the company can prove its doubters wrong, but right now that isn't the case. Instead, this remains a risky stock to own. And the problem is there are many companies offering similar types of AI solutions out there. Can BigBear prove it's any better than them? Right now, it's hard to make a case that it is. It's tempting to dream big and hope that this is the next Palantir, but there's no guarantee that it will be. Some AI stocks have proven to be duds. Just look at C3.ai. It soared when the AI hype was strong, and it even has AI as its ticker symbol, but that isn't fooling investors. It's been struggling to gain much momentum. BigBear is a speculative buy, so be careful with this one. So what do you think about BigBear.ai stock? Let me know in the comments. And if you like this video, please make sure to leave a like and subscribe for more. Thanks for watching.